You guys keep making this one Forex trading mistake over and over again. After watching this video, you will never make that mistake again. Let's go. In today's video, I'm going to be sharing a trade that I took on the 17th of August, literally this Thursday. And in this trade, you're going to see that one mistake that we make constantly over and over again. And if you guys make this mistake, drop it in the comments. Let me know whether you made this mistake or whether you're still making this mistake. Guys, let's get straight into the charts. Here I'm on EURUSD. You can see this was my reversal area. We got a nice clean reversal here on EURUSD. We start dropping after that. This is my daily imbalance. Like I said in my previous video, I would have wanted price to hold, this daily imbalance to hold, and then price to push up higher. It fails to do that, and so it closed beneath. So now I'm thinking bearish, and I'm believing that price is going to be looking to trade past this low. The reason I haven't taken you to that daily time frame for this, because I normally take you to that daily first, is basically going to give away everything. I'm going to break it down from this. Just imagine this on the daily time frame. Go to the daily time frame on your own charts, and I look at how this looks like, this piece of price action. You're going to see the daily imbalance here. This is a new week. Every new week is like a fresh start. So we're already trading beneath the daily imbalance. We have Monday, Tuesday, Wednesday, Thursday. We're trading beneath that imbalance. I'm looking at this response here to be a bearish response. Another key thing as well, actually, let's go down to the 5-minute time frame, is, you know what? This was actually going to be one mistake, but let's go for two mistakes. I'm going to throw in a bonus one, and I'm going to drop the bonus one now. I'm expecting a bearish day. I'm expecting price to be dropping to the downside. So whenever you have a news day, we have news on this day on EURUSD around 1:30. So you know there's going to be news released. All the gamblers are getting in here. Every single one of these gamblers are getting in here. You see it tapped into this daily imbalance here. Some people were looking to be bearish from there. And look at this, the news absolutely annihilated them. During that news release, this is where the gamblers are getting involved. And this is where the gamblers are getting snuffed out at the same time. And so the very first mistake that a lot of us keep making, I'm giving it to you now. Bonus mistake is that people be trading that news. Who really gets involved at that time? Technically, it's those gamblers, because heavy manipulation happens at that time. And so you don't want to be involved in this. And as you guys can see, look at that. Any single person who was buying from these levels here, just from here, got taken out instantly. And then anyone who was selling above this high and that high got taken out with this wick up higher. Like I said, this is where the gamblers are getting involved at this time. What you want to do is you want to wait for at least an hour or an hour and a half afterwards for the real move to happen. People are going to be chasing this to the downside. They're going to be chasing this to the downside thinking that's the move. No, that's manipulation. They're going to be chasing it to the upside. That's that false move. People are going to be jumping in here and believe they've missed the trade because of FOMO, and they get played when price starts dropping lower. And this is that break and retest entry, guys. Break above, we come back, we enter, because this is a retest. If they did not enter from here, they're going to enter from when they get a bullish candle, and they're going to catch this move up higher and think this is it. This is amazing. This is the best stuff ever. We eventually come back and we come and take out this low here. That's the first mistake. Don't be getting active during news. I mean, like, if you're in already, then by all means you're in already. Stop losses are most likely in profit. But if don't be trying to get active here, because you will get snuffed out. Your stop loss will be hit. Like I said, you want to wait for at least an hour. If you can stretch it to 1.5 hours, that's when the real moves are taking place. Now let's just check it. There was news release at 1:30. Look right here when I'm looking to get in. 1.5 hours is roughly about 3 o'clock. This is now when the real move is taking place. For my trade, I was physically looking to get active around here because I was actually active on the charts at this time. So you don't have to be in for the very highs to catch a decent move. That's a bonus tip, guys. I'm gonna give you two. So that one, you wanna wait ideally 1.5. I just like to stretch it to 1.5 hours because by then all the gamblers have been taken out the market. Everyone's given up hope, and then the real move takes place. I'm very passionate about the next one I'm going to share with you guys. So now let's go down to the 1-minute time frame. You guys remember I was bearish. Let's get rid of this. I'm bearish at this point. I'm looking for price to drop. Where could price potentially drop from? If I'm bearish at this point and I'm seeing this, I'm seeing an up close candle here. You guys might not see it properly, but if I do this, I'm on that 2-minute time frame. I'm seeing this whole upward move to run out liquidity above this high here. So I'm going to go ahead and mark it up so you guys can see it clearly. Then I'm going to go back down to 1-minute time frame. I didn't have to do that, but this is a whole upward move to run out liquidity. So I'm looking to jump in from this order block here. This is a bearish order block, and I'm going to put my stop loss near about this high here. My stop loss is in a place that's above 50% of the up close candle. So my stop loss came in roughly about these highs around 93, and my entry was down here around 87. So roughly about a 5 pip stop loss. So I'm entering from here as soon as it trades into the order block. Don't forget, I'm also looking at the left. This is still the up close candle, because ideally I like to be in from within the range of the up close candle, the low and 50%. That's ideal. And then I like to take it to the downside or something like this, above 50%. So it's roughly about these highs, 93-ish. So a 5.6 pip stop loss. I'm looking at these lows. Look at these lows, guys. Look at these lows. This for me is like quadruple lows. This is just my intraday lows. And so if they run out that buy side liquidity on top here, the opposing liquidity is going to be on the sell side. So this is why the draw on price for me was down here. So this is going to be my draw on price. This is quadruple lows. There's going to be stop losses beneath here. Everyone believes that price was struggling to get through here, and it failed and then exploded to the upside. And so when price comes back down here, price should obviously go up to the upside again. I'm thinking different. I'm thinking price is going to go ahead and smash out these lows. Whether it continues to drop or not, that's when your boy's going to be out. So it doesn't matter what happens next. So now let's go back down to the 1 minute time frame. Let's go ahead and put this on here. This is where I'm looking to take off my trade. You can see here it was roughly about a 4.6 hour trade potential, which is still good, guys. Don't let anyone knock you because your return is small. This was a scalp. I was looking to scalp this. It wasn't meant to be much. It was a 25 pip scalp, and that was it. You're not looking for a huge R with scalps. We're on a 1 minute time frame. Let's go ahead and just replay this. We're in replay mode at the moment. Now I'm going to go ahead and hit play. I haven't told you about the original mistake that we keep on making. I see it all the time. I hear it all the time. It'll be in my DM. Press play. Price drops to the downside. That's beautiful. And price is dropping. This is beautiful. Price is dropping. Now let's just look at this. This is very important, guys. This is very important, guys. I'm giving you guys like all the source. So I believe I was on a 5 minute time frame at this point, looking at the trade. I'm on a 5 minute time frame. Do I expect price to just drop to the downside and that's it, and I hit TP and everything's cool? Most likely not. It would be nice if price did that, but most likely not. So in my head, I'm always going to be thinking, so where can price potentially get to then cause a retracement to then drop again? So I'm going to be looking at this. I'm going to be looking at my down close candle here, and I'm also going to be looking at this area of inefficiency, this imbalance or fair value gap here. I'm going to mark it up in gray for now. This is my area of inefficiency here. Let's zoom in. Just for those that don't know, this is an imbalance or a fair value gap. This wick here does not come into contact with this one. So that means there's only buy side offered and no sell side is offered in here. So ideally, I would want to see sell side, these sell candles come into this range or into this area here to offer that sell side to the market. If price decides to retrace from here, I'm not going to kick up a fuss. I'm not going to stress because I anticipated and expected this. So now let's go to the 1 minute time frame. 1 minute time frame. I'm right here now. Let's go ahead and hit play. You can see price trades through the imbalance here, so keep note of that. And then it trades back above it. Let's keep hitting play. Price comes all the way back to my entry, guys. All the way back to my entry. And this is the main mistake that I wanted to talk about today. It's about moving your stop losses too early. And I know I've labored this point. I'm going to labor it again. For me, I know what happened back in the day is I used to move my stops early every single time. When price moved 10 pips, I moved my stop. And every single time what would happen is price would move, then come back to my entry, take me out the game, and then go forth and hit my TP area. And that happened a number of times. It didn't happen all the time, but it happened a number of times. But because of that, especially with gold, you have to think about the whole psychology of this thing. Before you enter a trade, you should have already accepted the fact that you could potentially lose 1% of your account. There should be no reason to panic. Trading is a game of probabilities. You're going to be winning some, you're going to be losing some, but as long as you're up, that's the key thing. You shouldn't move your stop loss into profit so quick. I know we were taught this back in the day. When price moves a certain number of pips, the way I do things is I let price get to my TP area before looking to move my stop loss. And you guys have heard me say this before, is either price hits my TP or hits my stop. Is either liquidity, you guys know what the liquidity was, right, these lows, or nothing. And I'm not saying that if price is blatantly showing you signs that it's going to hit your stop, you should just hold it there. There are some times when price is blatantly turning around at your entry, and of course it's going to hit your stop. I remember people used to say, give your stop loss enough room in case price retraces and then drops. That was the wrong information. What they should have said is give price enough time to get to its TP or to get to its target level. That's what they should have said. And just imagine this now, when price started pulling up higher, people would have thought price is going against me. People will be panicking. People at this point are either closing out their position or they're going to be stopped out because they would have moved their stop loss into profit. But like I said, with me, and I tell my mentees, it's either liquidity or nothing. This is a big mistake that I see a lot of traders making. And I know this is a psychology thing. The moment you see price turning around, you move your stops into profit, you're panicking. You're doing it because you're not comfortable losing what you could potentially lose. You can reduce your lot size or increase your stop loss if you're really that uncomfortable. But like I said, it's a psychology thing. You need to snap out of that. Just give price enough time to get to its destination. Now let's hit play. Look at this. Cool. We are going for this low. It goes for that low. And just imagine the people now. Let's just, in fact, let me play it a little bit more. There's a little bit more here. There's a nice candlestick. There we go. Look at this. Just imagine the people who bailed out of this trade. How are you feeling at this point? Think about what you would have done. The more you move your stop loss into profit, it's like your trading muscle memory just does it automatically now. And so you're going to have to find a way to snap out of this. And the only way to snap out of it is to forward test, not moving your stop loss into profit. Just forward test it. Take some time, forward test it. And then once you see it over and over and over again, you should be able to develop some confidence to not move your stop loss into profit so quick. Now, these people who jumped out, now price is down here, I bet they're fully confident price is going to run out this low. But now there's no way of getting into the trade. It's not even worth the risk to reward anymore. If your TP's here, my TP wasn't low. I'm trying to trade it to the low of the day. This is the intraday low. I'm trying to trade it to the intraday low, but it's going to be sell stops down here. And as you guys can see, look, we go straight for that low right here. Look at that. We're out the trade. Why? Because just like my video when I shared, let's go to the 5-minute time frame. Just like my video where I shared the best area to take TP, where would be the best area to take TP is beneath these lows. Why? Because there's going to be sell stops here. So what I mean by that is here, when people are buying, when their stop loss gets hit, they actually sell their order back. So if I'm selling and I close down here, I buy my order back. So if I'm buying at this point down here and they're selling at this point, that's the two sides, the buying and the selling taking place. There's always two sides to a trade. So I'm always going to be taking TP or closing a trade where there are willing participants who would want to continue this sell that I'm in. So I'm going to jump out the sell here. They're going to continue it. They might catch a small piece of the pie, but eventually it should turn back on them. Even if I wanted to jump in again, let's say I wanted to jump in again and it got stopped out, at least I would have had a winning trade, 4.6 R, and then a losing trade, -1. That's a 3.6 R trade. Not a losing trade from here, and then a losing trade from here, which is going to be a 2% loss. All right, guys, so this was the trade right here. A little small piece of the pie for the people that wanted to continue the trade, and then boom, you know, stop loss is hit. But anyway, guys, let's go ahead and put my executions on. So settings, executions, and let's go. This is my entry right here, like I said, and this is my TP. So let's just zoom in a bit more. Let's expand this up. Entry here, and then you got my TP area down here. Stop making those two mistakes and you win more.